Hello, good day, guys. My name is Nick, Technical Analyst with SuperForex. Today, we shall be looking at the technical analysis on the currency pair GBP USD. And first, we'll be talking about fundamental analysis before we move right down to technicals, which is purely what we'll be seeing on the chart. Now, we have seen that our GBP USD lacks any firm intraday direction and seesaws between tepid gains and minor losses, while a further rise in the US bond yields lends support to the USD and caps gains for the major. Now, rising bets for another 25 BPS. The Bank of England rate hike in May continue to underpin the British pound, while the GBP USD pair struggles to gain any meaningful traction on Thursday and oscillates in a narrow trading band through the first half of the European session. Now, the pair is currently placed just above the mid 1.240s, nearly unchanged for the day, although the downside seems cushioned amid a subdued US dollar price action. Now, the uncertainty over the Federal Reserve's rate hike path, along with a slight recovery in the global risk sentiment, failed to assist the safe haven buck to capitalize on the overnight bounce from a nearly 2-week low and lend support to the GBP USD pair. While fresh concerns about banking contagion risk in the United States, along with the debt ceiling standoff and looming recession fears, have of course been fueling speculations about an imminent rate cut by the Fed later this year. Now, the markets, however, have been pricing in a greater chance of another 25 BPS lift off at the next FOMC meeting in May, while this remains supportive of a further rise in the US Treasury bond yields, which acts as a tailwind for the greenback and seems to cap the upside for the GBP USD pair, at least for the time being. Moreover, the recent repeated failures to find acceptance above the 1.2500 psychological mark warrants more caution before positioning for any further gains. Traders also seem reluctant and wait on the sidelines ahead of the release of the advanced US Q1 GDP report due later during the early North American session, while the data along with the US bond yields and the broader risk sentiment might influence the USD price dynamics and produce a short-term trading opportunity around the GBP USD pair. The market attention will then shift to the release of the Fed's preferred inflation gauge, while the US core PCI price index on Friday. While in the meantime, expectations for another 25 BPS interest rate hike by the Bank of England in May could underpin the British pound and further contribute to liming the downside for the GBP USD pair. The bets were lifted by last week's release of stronger UK wage growth data and consumer inflation figures, which in turn favors bullish traders and supports prospects for some meaningful near-term appreciating move for the major. So now what to expect on this on a technical level? We have seen today's last price to be at 1.2462 and a total daily change of minus 0.0008 and total daily change percentage of minus 0.06. And today's daily open, we had it currently on the daily time frame at 1.247. While, of course, we have our daily SMA 20, 50, 100, and 200 to be 1.2434, 1.223, 1.2206, and 1.1934, respectively. So now what to expect from this? We are looking at a probable decline to at least to get close to the most recent support zone at 1.23886, and possible extension would be to 1.23518. And from this entry point, we are targeting 63 pips and possibly 99 pips from that entry point, of course, which is good money. That's our technical analysis on today's currency pair GBP USD. Now let's move over to the stock markets. Welcome back, guys. And on today's stock markets, we'll be having a look at eBay. And eBay announces the launch of its new Certified by Brand program, partnering directly with brands to scale their presence in the secondary market, while providing shoppers access to a wider selection of coveted and collectible luxury goods. Now, through this program, new certified pre-owned limited edition or exclusive only on eBay inventory from top brands like Constantine Checking, Zodiac Watches, and Levian will be available, complementing eBay's authenticity, guaranteed to deliver a more trusted, confident marketplace. Now, the secondary market for premium and luxury goods grew significantly in 2022, propelled by consumer enthusiasm for collecting and passion investments. Luxury brands have been edged further into the resale space, and many have fortified the presence by seeking partners to help compete in the secondary market. eBay Certified by Brand program provides brands and brand authorized sellers access to both the platform's 133 million active buyers and consumer insight from eBay's global network of buyers. Now, of course, this has been having no effect on the market because this news has just been released today. But at the beginning of the stock market, we're expecting to see improvements from this decline and a possible push up to the same region it has been coming from at a 44.36 axis, because the certified inventory in the resale market is an undeniable opportunity for brands and authorized retailers, and eBay is the ideal partner for those looking to scale. Now, global GM of luxury at eBay Certified by Brand program provides access to both buyers and brands to shop and sell luxury goods with confidence and certainty. So what to expect from this? We are really looking at a decline. We are looking at a gradual stop of the sell and a probable lookout for buy at this point. And when the market opens, we should be having our target put on TP at 44.47 and SL something like 42.32, of course, which is good money. From this entry point, of course, we'll be looking at 99 pips from that entry point. And an extension to that, we are looking at a possible of 142 pips from the entry point, of course, which is good money. And that's our technical analysis on today's stock market, eBay. I remain your host, Nick. Bye for now.